Welcome to Decoding the Shopper, a World Panel by Numerator podcast. Most data within this podcast is provided by World Panel UK and Ireland, with some additional sources for a wider perspective.
Chocolate's great for promotions because of the mechanics that it's quite impulsive and expandable. But the other element is there are just generally more promotions happening in the UK at the minute. Where deals are escalating, particularly temporary price reductions. The substitution, it's probably the most common question I've had for the last, I think, 3 years now, has been, are people swapping chocolate for biscuits? Are people swapping these two products? And I can see it intuitively, right? They're both snacky, treaty things, and they both can be sweet, but one's gone up massively in price, so that kind of substitution you can expect.
For whatever reason, you can't go on holiday to Spain this year because your flight's been cancelled, or they're too expensive. Then you may well make yourself feel better with a bar of chocolate while you're sitting at home.
Welcome. We're here today to talk about whether chocolate confectionery is going to deflate. My name's Sam Hart, Business Unit Director at World Panel by Numerator, and I'm joined by Jackson. If you could introduce yourself.
Thank you. I'm Jackson Woods. I'm a senior consultant with the Advanced Analytics team. So hopefully going to have an interesting discussion with you today about how pricing affects one of my favourite foodstuffs.
Yeah, I think we're both quite keen on our chocolate consumption. And so I think a lot of people will be quite excited to hear that the price of raw cocoa has dropped quite dramatically. It's about 57% cheaper today than it was a year ago. And that's after some pretty steep inflation for a while. And you might just assume that means surely chocolate itself is going to get cheaper, right? If the input has come down so much in price. What do you think, Jackson? Will it come down right away?
I think the vast majority of the public over the last couple of years have seen the oil price and the price of petrol at the pumps and realises that it's not exactly a direct relationship.
Yeah, there's a lot that works there, and actually when it comes to chocolate itself, cocoa content is actually only one part of it anyway, right? I think with Cadbury Dairy Milk, it's about 20-25%. Cocoa solids, it's called. So
sugar and
resources in there.
Milk and dairy, which we'll get to a little bit later.
Yeah, absolutely. And then there's all the supply chain, and then there's the manufacturer's targets to consider. So lots in there. But I think it's fair to say that manufacturers are pretty happy about that in the chocolate space, if nothing else, because those margins are getting really squeezed for a while. It'll just take a bit of pressure off of them. Do you think they're going to be exclusively happy about this?
I think it's hard to say. I suppose it depends on the manufacturer and what agreements they've got in place to do with buying commodities. And I think it's fairly safe to say, isn't it, that there is generally some margin hit taken when input costs increase. But that's not necessarily the case the other way around when costs come back down. So a lot of it depends on a response to the market signals that they're seeing. Are they losing share? Are they gaining share?
Yeah, well, and to your point of how far in advance have they bought their cocoa supplies, and what price was that locked in at? I think it's usually about 12 to 18 months worth of supplies bought in advance. So yes, prices come down, but it's like mortgages. What did you lock your interest rate in at? What did you lock your cocoa price in at? So yeah, you might not see that play through right away. Well, what we have seen so far actually is inflation has slowed down. There was the dizzying highs back in 2023 when it was up 22% year on year. So it's over a fifth increase in chocolate that you buy on shelves price. These days it's about 6%. So it's coming down, but it's still inflation, right? There's still prices up year on year, on up. So yeah, it's still looking a bit sharp for shoppers to look at.
And we've got to remember as well, as much as you bring inflation down, so it's near zero, those prices are still, as you say, the compound interest over those couple of years, we're still talking prices that are 50% higher than they were pre-COVID, say, for example.
Yeah, which makes it a much more, I guess, deliberate, considered purchase of I'm meaningfully indulging rather than I'm impulsively indulging. although I do still impulsively indulge in chocolate. So I think we alluded to this a little bit, but the thing with inflation is that yeah, it means your prices are going up, and yes, it can squeeze your margins, but in terms of the actual, I guess, spend going through on a category, on a brand, it makes the number look quite good actually year on year. So if you're getting set a spend target of 10% growth and inflation's at 8%, it's done a lot of the lifting there already. What do you think manufacturers' reaction is going to be then when they see inflation bottoming out like this?
I th I suspect wait and see might be the first response, because obviously they're going to want to defend those higher margins. And if there's no reason to compete, if nobody else is lowering their prices, there wouldn't be any reason to necessarily for yourself either.
Yeah, yeah, I think there's going to be a lot of mutual staring. What are you doing? Should I react to what you're doing? Oh gosh, yeah, and I guess if we do slip into deflation, or at least inflation's growth impacts removed, I think there are some levers that manufacturers can look to without that race to the bottom. So I think we had a little chat about this, things we would expect people to do. I think the number one I always bang on about is promotions. UK loves promotions. We've trained shoppers to expect that, and I guess on chocolate particularly, because it's quite expandable. The more chocolate's in your house, the more you eat because it's there, and you still come back. So those volume-led deals encouraging you to buy more at a time. That's something I fully expect to be cropping up. There are other routes that you expect manufacturers to be taking.
Yeah. Well, leaning into indulgence at the minute is obviously going to be helpful, because you've got well, let's say we're living through some complex, difficult times, and the thing is, food and drink. As much as we talk about people suffering from inflation, low incomes, and so on and so forth, food and drink is an affordable treat for pretty much everybody. And if you, for whatever reason, you can't go on holiday to Spain this year because your flight's been cancelled, or they're too expensive, then you may well make yourself feel better with a bar of chocolate while you're sitting at home.
Yeah, I can't afford a holiday to Lanzarote, but I can afford a 12.
Yes.
Yeah, that's fully and actually takes advantage of what situation we're heading into globally at the minute. You do expect a bit of that lipstick effect, bit of treatingness. So yeah, trying to jump on that, absolutely. I guess as well, there's been plenty of shrinkflation over the last few years. We might see some of that creep back, but I think Jackson and I were talking about this earlier, whether we think that it's hard, it's easier to do in some places in chocolate than others, right?
Yeah. So sharing bags were always the example. They tend to be bite size, so it's easier to put or change the amount of product that you put into them. But when you're thinking about tablets or bars, then you need entirely new molds. So there's quite a bit of capital investment required to change the grammage on some things. I suppose tubs, that may well be the battleground if we think about the timings and how they hit the headlines every year with the volume changes. I reckon Christmas is when this is all going to play out, when the Mexican standoff kicks off.
Well, so it might be actually a pretty good Christmas this year then, at least in terms of tub content.
Yeah, open question as to whether tubs will get bigger or the price will get lower. That's
Yeah,
it.
yeah. I'll eagerly wait. I know my nan will be very eagerly awaiting to find out. She's a big tub consumer. Uh, the final one is, I think, as you say, Jackson, there's going to be a lot of staring at each other. I think staring at which stores as well are doing what, and trying to maximize your presence in the stores that are doing best. If we're in deflation, you've got to try and play where the best growth is coming out.
Mm.
But I think to that point of, maybe it's not till Christmas that you start to see hub change, or certain battlegrounds emerge. There is this input cost lag effect, which means that deflation doesn't happen overnight. You bought your chocolate 12 to 18 months in advance. You've got to churn through all of that. That chocolate is bought at a relatively expensive price compared to today. Nothing from manufacturer's perspective. it's not particularly appetizing to give away that margin that was so hard earned, and can be quite challenging conversations with the retailers. I think there's the other concerns about the future, right?
Yeah, well, I think there's quite a bit of strategy to it because yes, there's that input cost lag, but if you look at what drove that inflation in wholesale cocoa, I mean, I'm not an expert, but it looks like a seasonal, a temporary disruption, right? So cocoa prices are almost certainly going to stay at that level, unless anything unstable happens. So in theory, manufacturers could take the hit on margins now in order to gain share, which is why it's that standoff, I suppose, is
Yeah.
you could take advantage, but everybody loses in the long term.
Yeah, exactly. So the minute someone drops their price, everyone's going to have to drop their price. So yeah, and if we do see another, I think it was a climate change induced shortage in West Africa, that caused a lot of the cocoa prices to be going up. So if we do see another climate change induced shortage, then suddenly everyone's back in the same difficult conversations. So trying to avoid that. So yeah, well, I think you probably won't see deflation happen overnight. And actually, I'm not even sure if we'll see deflation per se. I think we'll see manufacturers trying to play around it rather than just cutting straight price. So I talked about deals already. Chocolate's great for promotions because of the mechanics that is quite impulsive and expandable. But the other element is there are just generally more promotions happening in the UK at the minute. Where deals are escalating, particularly temporary price reductions. But I think, Jackson, you were saying it's still not as bad as it has been for deals.
We certainly used to see a bit more of an extreme dynamic with the high-low promotions, especially, a big gap between the two. One thing we found in our recent webinar on innovation, and a quick tangent, basically, when you launch a new product, you're highly likely to steal from your own portfolio. So if you don't grow the category, you're just diluting your own margins. But obviously, you need the promotions for the new products to be visible for people to buy them in the first place. So you need the promotions. So one of the things we saw that drove that category growth is shallow discounts. So you do lots of promotions, but don't cut very frequently. So that's very good for innovation. Probably healthy as a promotional strategy in general. But obviously, you're just not giving quite as much margin away as you used to.
Mhm. And I think there's an interesting point there as well around it's easy to switch off and on. That reversibility of whatever you do now in this deflationary environment, you need to be able to switch that off and on in case cocoa prices zoom back up again. So yeah, it's careful management of growth targets, definitely.
Yeah, it's one of the most frequent things to appear in the press, isn't it? Where
Yeah.
a manufacturer needs to increase their prices and the retailer says no, effectively.
Yes, I distinctly remember a certain retailer delisting a certain product for an entire day. I think it's to manufacture the entire range for a day to make a point. So deflation is unlikely to happen organically, but there are reasons it could happen in chocolate. So we've hypothesized three scenarios where that could come about. I think the most obvious one is, and we alluded to it earlier, if inflation's impact on growth is taken out, then you would hope that the other measures on growth, like frequency and how much people are buying at a time, and how quickly they come back to store, those kinds of things, you'd hope those bolster it back up, how many people buy into the market. If they don't, if volume keeps going down, it's been eroding over the last few years, then actually you're seeing overall market shrink. And that's quite scary to manufacturers, to retailers, if the whole pie is shrinking. And that's where you might start to see some more aggressive strategies to bring growth back into the market. And the other big one is anchoring. So that's the price gap versus own label, or the price gap versus another major player. Basically, if the gap gets too big and everyone's switching out of your portfolio to own label, say, so less likely in chocolate because it's relatively small, then you start to see people react. I think the major player one is probably the most likely out of these, right?
Yeah, and I suppose you've got sugar as the closest possible alternative there. If the gap between chocolate and sugar closes, you may well see people trading up to chocolate.
Well, that'd be really interesting. If you're seeing people starting to migrate back into category, I mean, that would be really good for volume growth. But obviously, if someone like Lindt started cutting their price down, everyone's suddenly up trading to Lindt because it's relatively expensive compared to the rest of the market. But yeah, if suddenly everyone's switching out, then you might see some aggressive price play to try and bring that back into line. I think the most likely scenario here is one of the big ones like Mondelez or Mars or Ferrero. If one of them cut their prices to make a volume grab, suddenly everyone else has to play the same game and keep up, and that's when you get that race to the bottom, and that's when you get chocolate confectionery deflation.
Yeah.
So let's take a look at some case studies. We had a little look at other markets where we've seen significant inflation or significant deflation. I think, Jackson, we've been calling it this example, the spreads one, the inflation grief cycle.
Very much so, which will become obvious when we get into more detail. But it's first worth setting the scene because comparing chocolate to butter is not the most intuitive thing. The reason we're mentoring butter in this context is inflation is something that is top of our minds at the minute and has been for a couple of years because it's been big news. But for the decade previous to that, inflation was almost flat in groceries. So that £1 price point hung around for a long, long time. And what finally ended that dry spell of innovation is the wholesale price of butter doubling very quickly. It's a very boring story as to exactly why that happened, but it gives us a really good case study of what happens when inflation hits something specifically without everything else moving at the same time. So you get a really clear picture of how shoppers responded. So effectively what happened is butter, as spreadable butter, had been in long-term growth for a long time for naturality reasons more than anything else. But you saw a very immediate long-term reversal of that trend. So all of a sudden, instead of people trading up to butter and spreadable butter, they started going back to buttery spreads and margarine at a very high level. Where it gets really interesting is where we zoom in to the week by week chain of events, I suppose I'll describe it as. So prices obviously went up significantly overnight. So there's maybe a 50% jump. So anybody who pays the slightest bit of attention to what they're putting into the basket would notice. And the first response over the first 12 weeks or so was simply just to defer the purchase. You've probably got some butter in the cupboard at home, or the fridge is a more appropriate place for it. So effectively, you're going to run down those stocks if you see an immediate price shock of something almost increasing by 50%. So you then, in the subsequent kind of 12 to 24-week period, you started seeing people buy something else in their trip. So when they finally ran out of butter, they bit the bullet, they realized prices aren't going to come down anymore, so they bought something significantly cheaper that fulfilled the same purpose. What's really interesting is from 24 weeks onward, people actually started to change their long-term habits. So they stopped buying butter and buttery spreads entirely. So what that means is effectively they're stopping consuming sandwiches and they're starting consuming things like savory pastry and pasties instead.
It's interesting because I've seen signs of all of those on chocolate, right? There's a third purchasing, that's volume reductions, you're waiting for that price shock to evaporate, and when it doesn't, the substitution, it's probably the most common question I've had for the last, I think, 3 years now, has been, are people swapping chocolate for biscuits? Are people swapping these two products? And I can see intuitively, right? They're both snacky, treaty things, and they both can be sweet, but one's gone massively in price. So that kind of substitution you can expect. And then the external factors, things like what chocolate is a gift. Suddenly, we talked a bit about this earlier, it's much more intentional to buy chocolate now. And we are talking to a colleague earlier, and they were saying their kids didn't get Easter. Well, they got some Easter eggs this Easter, but not many. And actually, most of them just got money instead because of the price that they've reached. Yeah. So yeah, really interesting seeing how all that plays out.
And it's going to be a lot messier, isn't it? This was the cleanest you could possibly see inflation in butter, but your prices are going up across different manufacturers at different times in different retailers. You've got a very complex environment for confectionery. So you'll probably see that from an individual level. People will immediately go, "Oh, that's too expensive," but then they'll come back. They might trade down a little bit. That switching to biscuits isn't going to happen in the moment. Nobody's going to see chocolate and then go, "Oh, I'll go to the biscuit aisle and get something sweet." That's going to be a much longer term shift. So 6, 12 months of sustained inflation, people might actually start adapting their habits to buy biscuits instead, but very unlikely in the short term.
Yeah, yeah, absolutely right. And as well, the substitution point, you can mess with that within chocolate, right? I think 2 years ago I was saying it's going to be a lot less chocolatey chocolate innovation, more wafer and white chocolate and all these other levers you got to play with. So let's move a little bit closer in terms of case study comparison. So coffee. Coffee is a bit closer to chocolate because it's quite habitual, it's quite discretionary in a sense, although it is quite habitual and habit forming. So you don't necessarily have the option to drop it entirely, but there's scope within that market to substitute to other formats. So you might drop down to instant, for example. Shoppers tend to moderate instead of dropping altogether. And what we did see in coffee is we saw 18% inflation dropping all the way down to -1% deflation over the course of 14 months. So really sharp change. So why that happened, like chocolate, it was climate change induced. And it's a very quick point on this one, really. The big thing to take away with coffee case study is discount depth is what escalated. So yeah, more margin to play with. You can be a bit more creative with your pricing and get away with a deeper deal without necessarily slipping into an unprofitable deal. So better margins meant that manufacturers were able to have deeper deals running on coffee, and actually that we did see a little bit of volume recovery as a result of that. But yeah, that was the main driver. But I think the best analogy, the best analog for chocolate will be sugar confectionery. It's sweets, essentially. They're very similar to chocolate, some differences, but this is where we saw inflation at a high of 28% back in 2023, dipped all the way down to -2% by the end of 2025. So over the course of 14 months, had gone from really high inflation to deflation. And of course, it's a sweet treat, discretionary, completely discretionary. But again, we saw that inflation because of commodity prices, poor sugar harvests, so the weather essentially causing a really sharp drop off. And the big thing you can take away on what happened on sugar confect is when we had inflation followed by sharp deflation, was that manufacturer alarm, essentially, when that inflation based growth evaporated out of market. So I was talking about this earlier, you still need to hit your spend growth targets, but if you can't rely on inflation, you're going to have to drive those other metrics. And so we saw promotions, the amount of volume going through on deal and sugar confect going from 14% to 22% within the course of just 3 months as inflation dropped out completely out of the market. So yeah, that's manufacturers essentially pouring on a deal to try and bolster performance, try and get sales going back through things like frequency, and also getting shoppers back into markets. Effectively, a 54% increase in the amount of deals. So that's what happened in sugar confect. And what ended up happening was significant growth through frequency and penetration as a result of those escalating deals. So what can we take away from those 3 case studies? What can we say is going to happen for chocolate? I think our assumption is we'll see margin funded promotions. You've got more to play with in terms of how squeezed you are on your margins, so you can do deeper promotions and more promotions because it's really expandable. It's the direction of travel in the market. It's what's worked in sugar confect as well. And we're actually starting to see that creep in already. So the promotion, how much shoppers are able to save on what they're spending on chocolate through promotions, that's already going up at the minute. And we're actually starting to see a little bit of trade up as well, which has been quite interesting. So it might be shoppers are trading up into a better product because they're able to save money with deals. And what's next? Well, you may have heard that we're running out an enhanced panel That's going to be us combining the power of our core panel and our World Power Plus panel to give us a sample of 55,000 shoppers to play with. What does that mean? We have a much better read of those impulsive small trips that chocolate might get picked up on. We'll have a better read of those younger shoppers that chocolate does appeal to. And we'll have a better read of those convenience stores where those younger shoppers on impulsive small trips pick it up. So we'll have a better understanding of this exact kind of trend going forward. I hope you found that insightful. That's everything from me, Sam, and from you, Jackson, today. Thank you.
Thank you.
Thank you for listening to Decoding the Shopper, a World Panel by Numerator podcast.